All right. On this episode of the Wise Old Owl podcast, we've brought back, by popular demand, Daniel Foch, who is just a lightning rod of information. Daniel, thanks for coming back.
My pleasure.
What is going on? The budget's out. Capital gains took a shit kicking.
Yeah. Yeah.
Where are we going?
Yeah, it's a good question. I mean, I think that I will say I admire the current administration's fervor towards solving the housing crisis, given that it seems unlikely that they're going to get another term. And it's a problem that, they could very easily leave for the next government. And the fact that they're not doing that impresses me a little bit. Because I don't think that they're capable of executing the majority of things that they've laid out, especially by the election. If they were able to execute even 50% of the things proposed in the housing plan, I would say maybe they have a chance at earning back some of those votes that they've lost, according to the polls. But
are they just being tuned out by a group of voters that said, well, let's give this group a chance 8 years ago, 9 years ago now, and they're just like, this isn't going to happen. This is all word salad.
Yeah, I think that they have a track record of not being capable executors. I mean, it's really easy to like, I can really understand why people don't trust that they're going to do anything in this plan. It's a great plan. Like, there's a lot of really good things.
So what are the key things that you like in that plan?
Yeah, it's a great question. I think that accelerated depreciation is probably the one that I like the most. So if you, as an investor, spend money on your property, you can
go from 4 to 10, right?
Yeah, exactly. So it increases the speed at which you can depreciate expenditures that you put into your property by 6%. That's pretty meaningful on your as an investor. And that gets housing built in the U.S. Like, accelerated depreciation exists in a lot of places in the U.S. and it's pretty capable of making a dent in real estate investment. So that's a big one.
But the difference is, in the States, things get built faster.
Yeah.
So capital cost to carry that drain for that longer period of time almost doesn't make it worthwhile.
Yeah, it is interesting, like, because they acknowledge that reality in the preface to the housing plan. They say that Canada is 35 of 36, so second last in the OECD for permit processing times. It takes us 3 times as long to process a permit compared to the United States. But they don't take any personal accountability for that, And that's one of the things that I really think that voters want to hear from them. It's like, we acknowledge
that we screwed up.
Yeah, or like some part of it. Not it's all our fault, because it's not really. Like,
no, there's 3 levels of government that are contributing to this disaster.
And this is 30 years in the making, really. Like, the last time the housing market bottomed and interest rates started falling and basically haven't stopped falling since was in 1994. So it really is 25, 30 years that it is taken to get to where we are. But that being said, they ignored, like, people just wanted them to treat it like a crisis 2 years ago or in 2020. And they didn't. They just did. I mean, right after it was like, Justin Trudeau says it's not a primary federal responsibility. And then the poll numbers come out and immediately
he changed his tune.
Immediately, right? Like, that was August, I think, of last year. And then, like, by October, they were like, oh, it's actually the primary federal responsibility.
When you think of some of the plans that they put in place, they brought in the first home buyer savings account, which I thought was pretty good, right? It's a deduction from income. You get a tax refund. Yeah. If somebody really wanted to parlay that into an RSP contribution, they could almost get a further refund from that if they look at a longer term view of when they want to buy. So you got this first home savings account. You can put $8,000 over 5 years, 40 grand max.
40 grand,
You could contribute to an RSP if you just extend your time horizon and expectation of buying a home. I think there are some tools in there for people to get what they want. The only problem is everybody wants it now.
I think that the other problem is that it's too far out of reach. Like, the first home savings account that you just described, $40,000, they've increased the RRSP to $60,000. If you combine 2 individuals into a household, which is the most common type of purchaser, that's $200,000.
Plus all the incremental increase to the first home savings account. Right?
Yeah, so, annual. Yeah, so, and then that's not even including, like, the tax-free savings account that you could also max out. the challenge is like, what household is actually going to save $100,000 per person? Like
in a short period of time.
Well, and it brings you back to the core problem here in Canada, which is that wages aren't keeping up with inflation or with the cost of living or with other places on earth where top talent can choose to live, and they can live there much more affordably. House prices are massively inflated when compared to wages. Like on a wage to price basis, we're on par with some of the most expensive places on earth, like Hong Kong and Sydney, and so Bloomberg had this chart that showed which countries have deviated furthest from their pre-COVID affordability. And Canada, compared to pre-COVID affordability, is not the worst. We're actually the fourth worst. The US is the worst, but before COVID, they had a lot of affordability, and we didn't. In 2019, we were already pretty bad.
Yeah.
And so, in order for us to get back to 2019, which was already a stretch
things were starting to slow down already before COVID.
Yeah, like I still maintain that had COVID not happened and had they not dropped interest rates to emergency monetary policy, that like 2017 would have been our long-term peak, and we would have ended up on the same cycle that we're going to end up on anyways, which is big drop, because you saw that big drop in 2017, like how 2017
have a 4-year delay.
Yeah,
You'd be in the same place.
Exactly. It would have been like the 90s, like 2017, and then a little bit of grind down. 2019 was like it was just flattening out. I think it would have been flat for another couple of years, and then it slowly would have started to recover. That's a healthy market cycle from my perspective.
So Daniel, let's think about the plan, the housing plan and some pieces of it. They extended amortizations on insured mortgages for new construction.
Yeah.
So let's talk about that for a minute, because I think there's an opportunity, if they were able to speak to different levels of government, to come up with a concept. And I want to throw this by you. Imagine someone buying a home for $750,000. We know that the input taxes is probably about 30%. So that is, let's call it $200,000, $210,000. What? It's about, let's say $200,000.
Mm-hmm.
Okay. If you take advantage of the first home savings account, I got a bug in here.
Almost got it.
Almost got
impressive.
it. Let's say you know what the input taxes are, and let's say it's $200,000.
Yeah.
And the governments all came together and said, you know what? If you are a first-time buyer and you take advantage of the first home savings account, your RSP home buyers plan, and let's say you got $100,000, we will give you a promissory note for the input taxes for, let's say, $200,000. You go get a mortgage for $450,000.
Mm-hmm.
And every year you stay in that home, because you're a first-time buyer, we'll forgive 1/20th if you stay in it long term.
Yeah, so like a tax incremental grant.
Yeah.
Yeah.
And all of a sudden you get developers that will build purpose-built homes for first-time buyers, knowing that the affordability on a $450,000 mortgage is a lot easier than $650,000. And these young buyers, or first-time buyers for that matter, don't have to pay interest on an input tax. That really isn't a true cost of the home. It's a built-in tax that the government's pounding on the first-time buyer or the new construction purchaser. Like, do you think that would be viable?
I think it's a really good way to equalize the outcomes. Like if we accept that older generations have been given a significant advantage in the housing market just based on time and inflation and whatever it is, and that we need to give a comparative advantage to younger generations, even though that seems unfair to like give them cash like you just described, basically, I would agree with you. Like it's funny because I have a very similar policy concept in mind, and you should take that and submit it to have you seen the Hubs like contest, the Hunter Prize?
No.
You should check it out. It's like $50,000 to submit a
Let's
policy.
put one together.
Yeah. I just submitted one yesterday. It's very similar to what you just described.
No, but what I think what ends up happening is the federal government, who would probably be the group for giving the loan, would go after those cities to reduce their input taxes.
Well, there's also so consumers are maximizers, right? So so let's just say that on a brand new house, you already get the federal portion and the provincial portion back through HST if you're buying it for personal use, right? So you get a HST rebate from both federal and provincial, at least in Ontario. And then the only remaining piece, really, outside of income taxes and HST input credits that are paid on materials and labor to build the house, which are too hard to track to really pull out. The big one is development charges, right? It's such an easily quantifiable thing. And it's funny because, both candidates that are, from my perspective, capable of winning the race for prime minister in the next election, or the two closest, let's say, have this concept. It seems like the Trudeau government kind of took it from Pierre Poilievre's government or campaign, which was that you would pay municipalities based on
performance.
On performance of getting houses done. And now the Trudeau government, understanding that there's no way that they would possibly be able to do that because it would not get most of these units wouldn't be done until their next election, which they're not feeling confident about winning. So they're paying them now in increments,
25% for every milestone, right?
Yeah. And so with that, it's like, why are we creating this new infrastructure? And this is just a classic government bloat from my perspective. It's one of the biggest problems with a country like Canada. Why are we creating a new infrastructure when the infrastructure already exists? The municipal governments already take a fee from the buyer for the completion of that unit. And that money, a development charge, goes into a separate budget of municipal government. So municipal governments have two budgets. Operating budget covers operations, capital budget, that covers capital improvements, like the capital costs, schools, roads, infrastructure, etc. The capital budget is funded exclusively by development charges. So if I was a government and I were to say, I want to mainline capital into municipalities who are effectively creating housing, I would do it through the buyers because we already have the infrastructure. All they need to do is have the same thing that lawyers do to execute HST rebates or land transfer tax rebates.
Correct.
That infrastructure already exists. All you're doing is adding a new program that lawyers already know how to execute. And we already have a trusted system that's worked for years for that to take place, and take the capital, and they give a rebate to a first-time buyer who is buying from a municipality against the development charges. And it would be a fixed amount, maybe, I don't know what would be a reasonable amount, $50,000, let's say. And what actually will end up happening is, based on economic principles, is because consumers are maximizers, they're going to go and buy in a municipality where the rebate that they get is the largest portion of the total cost, right? Because they want to get as much freebie as they can. And so municipalities will have to actually start reducing to get to that fixed amount. If you go to an inflated or percentage-based amount, then it would incentivize municipalities to inflate the development charges to suck more money out of the federal government. But if you fix it the same way they do with land transfer tax rebates and stuff like that, then it disincentivizes anybody to climb that tax structure. So I agree. I have a very similar concept as what you're saying. I had always thought of if there was a way that you could time release it as well, like you're saying, where it incentivizes people to stay in that community.
Well, I think the mechanism's there with the home buyer plan, right? Because you have to repay it over 15 years,
right?
And CRA tracks that.
Right.
There could be a mechanism there that could already...
Yeah, because you have to put the money back in.
Got to put the money back in.
RSP as well. So if somebody is using those programs, they'll almost grant you forgiveness on a portion that you have to pay back in.
That's right.
That's a great idea.
Why wouldn't all three levels of government in a crisis come together and say, how are we going to solve this?
Have you ever seen that Spider-Man meme where the Spider-Mans are pointing at each other? That's the answer to your question. It really is. Everybody thinks it's someone else's fault.
It's who's on first, what's on second. It's the Abbott and Costello routine.
Yeah.
It just never gets solved.
It was a lack of accountability. Nobody wants to say, yes, it's our fault.
It's one thing about Doug Ford that you got to... It's funny, it's sad and funny at the same time. When he screws up, he sits in front of the press and say, listen, I made a mistake. I apologize. We're going to fix it. This prime minister can't do that. They cannot take any accountability. And you wonder how Doug Ford has that ability to just say, I screwed up.
I think it's because he knows he's not going to. And honestly, I honestly think that Canadians might have resonated. I think the Trudeau government would be in a very different position had they had a greater degree of accountability over the last couple of years and done the routine that you're describing. Because he doesn't necessarily actually go and fix the problems, but he does say that. He said,
you caught me.
Here,
You caught me red-handed. I apologize. We'll fix it.
Yeah. And yeah, and a lot of it's just undoing stuff like, oh, we're just going to walk that one back. And like,
So I want to talk a little bit about this number that Sean Fraser's put out there, 3.9 million homes to be built by 2030.
Yeah.
I don't think it's going to happen.
No, I mean,
It's not going to happen.
Yeah.
What can they build? If everything worked the way they think it could work?
I think we hit like peak construction in the last couple of years, really. Like we were 170 shy of 200,000 homes. Like it's the same as what we saw in the 70s with the current labor force. Like, because the big piece is like everyone was putting so much pressure on municipalities to approve and ramp up approvals and bullying them and saying that they're the problem. And then now all of a sudden we have the most approved units we've ever had in Canadian history. Like the unit pipeline of entitled units, biggest we've ever had.
But nobody's building.
Now you've just taken that and moved the bottleneck to the next phase of the supply pipeline, which is supply chain, which is construction. And when you get to that phase, now you've got capital costs, construction loans, construction costs that are going up, right? All of these things that have been incredibly inflationary during that other period of time because they're oversubscribed or because of the mess that the economy has created. And now we're just sitting with all of these units that could be built and nobody can afford to build them. Or nobody's incentivized for whatever reason to build them. And the government is trying to do certain things to make purpose-built rental programs would be a good example. MLI Select Financing, which has been incredibly popular. They doubled the CMHC capital pool. So that the Canada mortgage bond issuances, they took it from 40 billion per year that they were going to issue to 60 billion. So they increased it, they didn't double it. They increased it by 50%. And they also committed to being the largest purchaser of those Canada mortgage bonds, which
what does that tell you, though?
I mean, it says a lot to me, but so if I were to speculate, I would say that there's not a lot of foreign demand or market demand for the bonds, which is concerning. It would tell me that they want to, they're basically exercising yield curve control. They're trying to reduce the insured mortgage rates.
It's hard to do.
I mean, it seems to be working, but it comes with a consequence, right? Like, and the way that they've kind of rationalized it to the public, and you could see it taking place. Like, the writing was on the wall. 2022 or early 2023, they were going to get rid of the Canada Mortgage Bond program, right?
It was slated to go.
They literally were going to get rid of it, and then they did a consultation through the Bank of Canada with a bunch of bankers, and the bankers basically said, you shouldn't get rid of it. In fact, you should actually increase it, and you should issue Government of Canada bonds at a cheaper capital cost and then sell the Canada mortgage bonds at a higher capital cost and pocket the spread. So they're actually making money from this program, by the way. And that's how they've rationalized it to the public, because it's spread capture. So they borrow at a cheaper rate through Canada mortgage bond or Government of Canada bonds, and then they lend out that money at a little bit of a premium, 50 basis points higher, through the Canada mortgage bonds. And that's technically revenue generating. I don't think that's the primary reason for doing it, but
is it doing what it's supposed to do? That's the real issue.
It seems to be, yeah. I mean, they're still the cheapest rates, like insured. Like you can be the highest leverage borrower in the market and get the best interest rate.
But the turnaround time's still painful.
Well, on MLI Select, but even on owner occupied, like owner occupied insured borrower gets what, 50 basis point discount.
They get a definite discount over the conventional side for sure. But still got to qualify under a 25-year AM. Right. That's the challenge, right? Like they should be stretching that, especially if it's a owner-occupied rental, 2-3 units, because I think people are going to have to go into house hacking techniques to afford these units. But at the same time, it's still a struggle for banks to put value on these additional units that the government wants the city to allow, which, City of Toronto allows up to 4 units. That process still is a challenge. I met with the president of the Appraisal Institute, and they really can't get a value on these additional units, like these
I think they're just going to end up appraising at cost probably for the first little bit, like garden suites.
He doesn't even think he could justify cost because he thinks they're giving up some rights to the property that they then have to take into account. And we argued over it, and he's thinking between 65 and 75% of costs.
Crazy.
And how's that going to motivate people if you don't get the lenders involved to help finance it? Because private lending's expensive.
If you can't get takeout financing on these projects, like if you can't put term debt, like a long-term mortgage on a garden suite, then it'll never cash flow. And nobody's going to build them if they don't cash flow. Like nobody's going to be like, oh, I'm going to go put a house in my own backyard because it's the right thing to do and it makes me no money. And like,
well, I think if you're buying, you got to have at least $500,000 in capital to buy one, to do the whole project and cash out.
Yeah.
If you have an existing property that, you've inherited or it's got built-in equity value over time, it's a good opportunity to do a takeout and build one out, maybe convert it, repurpose it. But to buy something to convert, it's very difficult if you don't have the capital. Yeah. It's very, very difficult.
Yeah, for sure. For sure. I mean, ground up build, you're probably like a minimum of $250K for like a actual shed, right? Like 500-600K.
Well, we're doing 1,200 to 1,300 square foot garden suites and laneways that are 2-story, 3-bedroom, and it's $450 to $550 depending on your finishes.
In total.
So
that's on a per square foot basis, like $350 a buildable.
Let's call it $4.
Right. It's not too bad.
It's not too bad, and most of the cost is because of logistics.
Tight spaces,
disposal, tight spaces, finding the trades that want to work in that environment that's tight, especially laneways per se, because you can't get trucks and stuff in some of these things. They're really tight.
Do you think modular is going to make that, like, improve that at all? Probably not for laneways.
Not in the city. I think it's going to still be a challenge getting it over, especially with all the old power lines. And
you need to make them light enough that you can bring them in with a helicopter.
Or a drone.
Yeah. There you go.
Last thing in the budget is capital gain.
Yeah.
The increase to the capital gain tax. Yeah. It impacts everything on every investment, so it's not really specific on real estate, but what do you think of that? And how do you think the market's reacting? Yeah,
I mean, I put out a YouTube video on this because, I mean, my biggest concern is that I don't like when governments lie, and they lied that it was for...
They've been doing a lot of it.
For sure. Yeah, and I've been pretty good at calling them out, like, but, they said that it's only going to impact 0.13% of the population. But,
that's bullshit.
Right. Like I did the calculations and it would be like somewhere between 10 and 20% of the population that has a pending capital gain that would qualify for the higher amount, because you've got 10% of the housing stock is owned by, 10% of real estate is owned by multi-property owners is what they call them, which is somebody who, would have to pay capital gains on one of the two properties. We don't know which one. So if you own a cottage as an example, and you can see that article just came out, there's a flood of cottages now because people are trying to get off.
Oh, my wife's looking for one.
It's a good time to buy them.
She's pointing them out to
between the COVID crash and the capital gains sell-off. I mean, it's probably a good time to buy a cottage, honestly. But so there's that piece, and so I think you're seeing a lot of people front running. We know that has an expiry date, June 25th.
Yep.
That's kind of over. That frenzy's over. So like, let's think more about the long-term piece. So long-term is going to impact 10 to 20% of the population. The way I look at it is, where they think that this is going to free up housing stock, or their objective was to try and free up housing stock, it's actually going to have probably the adverse effect.
I think people are going to hang on to them.
It increases your incentive to hang on to it, because so now all of a sudden, I put out a poll on Twitter and it was like, what would you rather do? Would you rather sell your asset and get, let's say you have $1 million capital gain, right? You paid $1 for the house and it's worth $1 million.
In a depressed market.
Right. Yeah, but let's just say like you have $1 million capital gain. You can sell it and get after tax $700K, or you can refinance it and pay no tax and get $700K, right, at a 70% loan to value. And you get to keep the asset, and you would assume that it's going to cash flow.
And your interest cost is less than the tax increase.
Right. So yeah. So what, consumers are maximizers. So what is this going to do? It's going to force, or it's going to incentivize more people to hold on to assets long term, and which is a good thing from my perspective. Like, I think that we should be encouraging investors to hold assets. I don't think that was their objective of this policy. Right.
I think what we're seeing, and my wife looks into some of these listings, and she made a few phone calls. But what's interesting is it's usually families that are squabbling over the family cottage.
Yeah.
Right. And they're arguing over the tax consequence, and do we trigger it, or crystallize the value and transfer ownership. They still want to keep it, but they're triggering a tax and they don't want to pay it.
Yeah.
right? So a lot of them haven't transferred over title, and they now are forced to do it. And it's prompting them to say, well, I don't want to pay the tax. I don't want to come up with the cash.
Yeah.
And it's not necessarily selling because they're trying to save tax. They're selling because they don't want to pay and carry it
Yeah.
in a mortgage.
Yeah.
So it's an interesting situation. And, I responded to one of your Twitter posts. I don't know if it was yesterday or today. I got a lot of heat from it where, a lot of people that are self-employed bought investment properties because they don't really have a pension plan.
100%.
Right. And there's a lot of folks that are, plumbers, electricians, tradespeople, got a small little business, and that was their retirement plan.
Yeah.
And it's not like they got $1 million homes. They got a little income stream that's going to complement their OAS and CPP, which at the end of the day, the max is $2,000 a month. And that's not enough today to survive. So I don't know. I think you're right. It impacts more than the 0.13% that they say it is. And this whole doctor situation is even more alarming because we have a healthcare crisis too, in addition to the housing crisis. And the last thing we need are people to say, I'm out of here. Like I got friends that are surgeons and they get offered big dollars in the States. They stay here because they love their family and they don't want to uproot them. This could be the tipping point where they say, you know what, maybe it's time.
Yeah.
Maybe it's time to head down south and try something new.
Yeah. I mean, it is funny because I still think like when you combine federal and provincial, our capital gains taxes, and like they have 100% inclusion rate in the States, right? And now they're proposing like the tax amount is lower, the tax rate is lower, but the inclusion rate is higher. It's all of your capital gains, whereas here it was just half. I like a lot of people, and I think you're one of them, think that the next government is going to reduce the capital gain.
I don't think they're ever going to talk about it, but they might.
I think we're going to head the same path that we saw in the 90s, where we went from 50 to 66 to 75. I think that you've got a government that, I think that this is de facto modern monetary theory. I don't think it was their intention, but, in modern monetary theory, you put a bunch of money out into the economy through spending, and that money circulates and it economizes and it earns a return and it is economically productive. And then after it's done all of its economic productivity, you impose a tax and tax that money back out. And I mean, functionally, that's what they're doing. They put a bunch of money into the economy through fiscal policy and monetary policy. It inflated the value of assets and they made everybody asset rich. And now what do they need? They need to take the money back out, because how else are you going to get all that wealth out of the economy? Really? You can't. And that's, I think, the problem that governments are bumping into with all of this excessive spending right now. You're seeing it happen in the US now with Biden proposing increasing their capital gains tax rate. The Western world has a very big debt problem, and it's created a risk a geopolitical risk against other economies that are less indebted, right? And I think that they have to be very careful about how they approach that.
So other sources of revenue. Growing up as a kid, I was always told how rich Canada is in natural resources. Yet we can't extract any of them anymore because we have this woke culture. The embassy in Ottawa for Qatar just celebrated getting 2 licenses to extract LNG off the coast of Newfoundland.
Right.
We have coal being sent over to China double the rate from 7-8 years ago. When can we start profiting from our own resources and trying to generate a revenue stream from them that is responsible, can help us out of this debt problem, and look at a potential Norway or Alaska who rewards their residents with revenue from these national programs? Do you think that could be in the cards?
If it's not in the cards, then we have a very grim future as a country, I think. I think it's really only a political shift away. While I don't think that the Pierre Poilievre government will reduce capital gains tax, I do think that they will go all in on natural resources because they don't have a choice. Economic diversification is the only way out of this problem. Our problem is the fact that we've overexposed our economy to housing, And in doing that, we've functionally created like a housing Ponzi scheme where our biggest export is citizenship. And I have no issue with that, but it's a very difficult way to run an economy. And now we're realizing that it's challenging, and you're starting to see them walk back incremental changes to policy where there were errors. And I think that had they not, like, you could have continued doing that, but also focused on the remainder of the economy that Canada is good at. Natural resources, we're the most resource-rich economy in the world, I think, after, or maybe second after Russia, depending on the metric. How do we put a lot more time and energy and capital into that? We would have a balanced economy, and we wouldn't be feeling this huge credit crunch and counter cycle as a result of increasing interest rates, because our economy would be, we'd have higher wages, we'd have lower inflation. Everybody, there would be a lot of growth. We'd be running a more capitalistic system. The free market would be in control, not fiscal and monetary policy being primarily in control, which you can see are primarily in control. Like TIFF fired the warning shot in February of 2022, and the market being forward-looking crashed house prices 30% in 2 months. If that's not a sign that your market is overexposed to debt,
Well, I think is it the premier of New Brunswick? Higgs or Biggs? I think it's Higgs. I think so. He talks about, Canada having 1.5% of the emissions globally. Why not look at this a little bit differently and work on the math and say, okay, why don't we go to 3 or 4%, extract cleaner energy and sell it abroad and reduce other countries' emissions? And we're a net positive globally if this is truly a global issue. Because when you see other countries extracting our resources and polluting, it's tough to always get hit over the head with carbon taxes and increases in taxes and everything to support all this. Like, do you think that is a viable solution, or is that something that people are like, well, I don't know, I think we want to cap it, we want to meet our 2030 targets and 2050 targets?
I think, like, I would have to see the economics, but it makes sense to me. Like, that sounds reasonable. It doesn't sound unreasonable at all.
It goes towards your natural resources. Like, there's money there. Let's be smart about it.
I don't think that most Canadians really give a shit anymore about, like, meeting. I don't think they ever did, but about meeting global climate targets or whatever. I think people went from having a very collectivist, humanistic approach to living to, you put financial stress on every household in your country, and people become very individualistic very quickly. And now most people are looking at their bills, looking at the gas prices, trying to figure out how to survive the next 2 to 3 months. It's hard to give a shit what's happening with the environment in the world when that's the position that you're put in. And so I
think it was Konstantin Kisin. I think that's his name. The guy in the UK who says poor people don't give a shit about the climate.
Right.
They just want to eat.
Yeah. Yeah.
Right. So if there's still poor people, no one's going to give a shit.
Yeah. And I think that, like, continuing to stack these costs onto people, it's very tone deaf. It's very myopic, right? Like, I think that the government has completely shot themselves in the foot by incessantly doubling down on this narrative that they have that Canadians have clearly detached from because out of pure desperation. We can't care about that stuff anymore. Like, Canadians have been taken from some of the most caring people in the world, I think, about humanistic things to people who now don't have a choice but to only focus. And by and large, we're still very, very privileged people. But the relative change from being where we were
to where we are now,
now
is dramatic.
It's palpable. You can feel it. Everybody can feel it. I don't remember the last time I was in a room where the conversation didn't come up about how hard it is right now, how little money people have, right? Like, everyone is struggling. And this is like what a recession feels like. You can wash it as much as you want with population growth and GDP growth and whatever, but on a per capita basis, we've seen no economic growth since 2016.
So on the population growth issue, I know you're a big advocate of rental properties. We're going to see a decline in the NPRs. They're cutting it almost in 30-40%.
Yeah.
And a lot of people that have come over here to get an education are leaving because they're just realizing that it's too expensive. How's that going to impact the rental market? Is there going to be some softening?
Yeah, I think you'll see a significant decrease in demand in the short term.
Will it be geographic or will it be across the board?
Geographically, I would say there's Mike Moffat put out this table. His tweets self-destruct, so you have to go find. But if you go on Reddit, I think if you just Google like Ontario colleges 240% or something like that, he had this tweet that showed like how much Ontario colleges had increased their international student enrollment. The international student cap being a really good example. Like Ontario's international student population, once the cap takes place, is going to be reduced by like 65%. Like that will have a huge impact, and a lot of that's going to happen in these like strip mall colleges, these like public-private partnership, whatever, and that should happen. But it's also going to happen in places where you've seen a huge international student population growth in legitimate colleges, like Sioux College, like 4,000% increase, right? Conestoga, over 1,000% increase, right? A lot. So go look at that table, and North Bay is another one, Canada, right? 600% or something like that. Like, look at all of these colleges, and that the higher the percent, the more exposure you have to a international student cap.
My brother-in-law teaches at 2 of them,
right?
And they're okay this semester. But it's the next one that's
because they're grandfathering. Like anybody who's in can stay.
The next September is going to be bad,
right? And I mean it's scary because all of these policy like bombs coincide with interest. Like the biggest renewal wall, right? 2025, 2026. You've got 2/3 of mortgages renewing in those 2 years.
I want to shift gears a little bit about the housing unit composition.
Yeah.
Last 10, 15 years, tons of condos being built, of which 65, 70% are one-bedroom condos. Is that a flaw that's going to be felt long-term as families need bigger spaces?
I mean, that would be implying that we're having families, which we're not. I mean, really,
that's a good point.
I mean, like
negative birth rate.
Yeah, our birth rate's the lowest it's ever been, right? So the fastest growing household size in Canada is 1, and the fastest growing household type in Canada is roommates. So you tell me what's happening, right? I mean, it's not like, I don't think we're at risk of running out of like, or this creating an imbalance.
But immigrants who come here do come here with the idea of growing their family. Well, and the majority are no longer Roman Catholic or Christian, right? They're Muslim and Southeast Asian. So they do have bigger families.
For sure.
Do we have a mismatch between the composition of houses and families? I don't know. I think you hit on something that makes a lot of sense. Being single and roommates is probably...
People aren't going to have families if they can't afford to, right? Yeah. And it kind of goes back to what I was talking about with that Bloomberg thing. It's like we can give all of these things to people to try and buy a house, extend their amortization, reduce the down payment, whatever. If people can't afford it, they can't afford it. Like giving them more debt over time,
pay for it, right?
Right. If they can't fill that $80,000 or $40,000 first home savings account, or if they can fill it. Like even if they are the person who can maximize, and they're two super savers, they both have $100,000 spread across their first home savings account and RRSP. Can you buy like a decent house in most of Canada's major markets with a $200,000 down payment? Not really.
So with all this being said, will values of homes be going up or down?
Yeah, I mean,
or will it be certain segments of homes that are going to be going up? And the single family 3,000 square foot home may be on the way out.
So yeah, I think that housing type is going to get cut up into multiplexes, a lot of it, and then it'll be reserved for the ultra rich, which is a shrinking class in Canada, and so more of it probably will end up getting cut up. I think that when you look at those Bloomberg statistics, if Canada wanted to get back to our pre-COVID affordability, one of 3 things can happen. Affordability isn't rocket science, right? It's a function of 3 things. what's the house price? What's the interest rate? And what are the incomes? Because it's how much can you afford on a monthly basis? So on an income basis, our incomes would need to rise like 60% to get to the same price to income level that we had in 2019. On a house price basis, house prices would need to fall 35%. They've already fallen from when that statistic was published. They've already fallen probably 20% on a national level. We saw like the second biggest house price drop in Canadian history in 2022. Or interest rates would need to come down 350 basis points. None of those are going to happen in absolute, but in combination, each of them probably. So you'll see, we'll start to see wages rising maybe a little bit. Probably not now because I think we're still on the rising unemployment, but in recovery, I think we'll start seeing people demanding higher wages because cost of living is so high. I think we'll see interest rates are going to come down eventually, probably 100, maybe 200 basis points. And I think house prices are going to come down a little bit more. I think we just saw 1% house price growth last year. I think we're kind of going to be on that inflation line for the next
One of the biggest red flags that I see is that cohort of fixed variable payments that have to go back to their original amortization at renewal.
Right. Yeah.
I think we don't have to wait. I think it'll be 2026, 2027 where that cohort matures. Right. That's going to be a telling time on whether or not OSFI and the government step in and try to help those folks out, because I think there's going to be some major challenges there, especially for young families that, they bought as dinks, double income, no kids, and now at maturity, they probably have a kid or two and somebody's off on an 18-month mat leave. Mm-hmm. There's going to be significant strain for some of those new families coming into that renewal for the first time and seeing a major payment shock with the possibility of a lower income if they're in that maternity leave situation. So I'm going to reserve judgment on how this market reacts in 26, 27, because I think it's going to be dire.
I think 25, 26 are probably going to be the worst years for us. And it's crazy because I think it feels really bad right now, but and I think anybody who is up against one of those huge capital cost increases needs to pull out their calculator now and figure out what that's going to cost and see if they can afford it. And if they can't, they got to get ahead of it, because in 2025, you're going to see a lot of distressed supply. Yeah. And I don't know if it materializes in a lot of house prices or in house prices coming down in a lot of markets, because I do believe the thesis that there's a lot of people waiting on the sidelines for more affordability. So if we're in a 25, 26 and you're seeing a lot of distressed supply, and that's coupled with a bunch of first-time home buyers that are now supercharged with government programs and 100 basis point interest rate reduction, it could balance out. But I don't know. My crystal ball is still a little cloudy on that stuff.
If somebody has a chunk of money, are you still bullish on real estate?
Yeah, in the right markets, for sure. I mean, I think anywhere you can buy below replacement cost, cash flowing on a major arterial road, ideally, because you're at a discount you're not competing with home buyers who are the irrational consumer. Ideally with the ability to add units eventually or create density in the fullness of time. There's many markets in Canada where you can do that. Those are markets where I would do it. I would be preferential to a more landlord-friendly market, just to simplify as an investor, like Saskatchewan. But we're seeing a lot of good investments in markets like Quebec. Quebec's a fantastic investment market. Its landlord and tenant board is a little bit more, I guess people would call it more tenant-friendly than Ontario's. But in Ontario, you get killed by the waiting times, right? Ontario's board is relatively fair, but the time that it takes to get a hearing,
it's a disaster.
What really, it really, the person who falls victim to that is the person who's submitting the claim. So it's just as often tenants it's statistically less often tenants because they're submitting claims less often. But that sucks for everybody. But anyway, so Quebec, a lot of the East Coast stuff, New Brunswick, Nova Scotia, great markets. You're seeing this exodus of Ontarians moving there to buy and rent houses because they can't economize in southern Ontario.
Before we wrap up, you have an unbelievable podcast with Nick Hill.
Yeah.
Canadian Real Estate Investor Podcast. Mm-hmm. It's rocking. But you also started a new course.
Yeah.
And you've created all these meetups across the country where like-minded individuals that are interested in investment properties and rentals could hook up.
Yeah.
Tell us a little bit about that.
Yeah, it's just real estate in general. Like, but yeah, we've created, we're in 19 cities, over 2,000 people. I used to run these before COVID, and I would just like find a venue, like a bar, and we would just meet and talk about real estate. Like,
Well, Armando went out to the last one up in Vaughan, so
Yeah?
he's looking forward to heading back.
Nice.
I'm going to try to make my way up there as well.
Yeah,
But
I think I'll be at Vaughan this month, and or Barry. I don't know. Nick and I are splitting the.
Are
We'll
you?
see. Yeah.
But listen, I think it's great stuff. You're also doing a course.
Mhm.
Tell us a little bit about the course.
Yeah, the course is just teaching people sound investment fundamentals. We call it realist.ca. It's supposed to be realistic.
But it's also when to walk away.
Yeah.
It's more about making sure everything lines up
Yeah.
and know when to identify a dud.
And just to know, yeah, like, I mean, I think a lot of it is there are so many people who, had they had sound advice in 2021, 2020, you know, they would have saved themselves hundreds of thousands of dollars in not making a mistake. And if you have somebody there to tell you, like, who's not financially incentivized to make a sale and push you into making a purchase that's probably not a good purchase, you can save a ton of money. And so to me, it's like, you know, people pay us for the course, for advisory, for this community. It's really easy to get that value back out of it in just having somebody who presents really, really realistic fundamentals on real estate investing, which is, you know, what I just told you. Like,
Well, listen, I know a couple guys that took it and they loved it.
Yeah.
They really picked up, and they're in the industry, and they
Yeah.
thought it was very valuable. So I know it's going to be in depth,
yeah,
grinding out some really good content, and good
Yeah.
for you.
yeah, it's
Hats off
good,
to
and
you.
it's a good accountability system. We make sure that people, like, you know, like, we'll sit and build spreadsheets with people regularly, and like a lot of people, everybody says, "Oh, can you just send me the link for this?" And I said, "No, you got to build the fucking spreadsheet yourself, because if you don't understand how each thing changes another, like, honestly, you need to be the one who's, and if you don't know how to use Excel or Google Sheets or whatever, then like you got to figure it out. It's a necessary skill to understand how this cell interacts with that cell. If you, like, honestly, had a lot of people did that in 2020 and said, "Oh,
They
what
wouldn't
would
be in the
happen?
mess
Yeah,
there.
what if my interest rate cell changed from 2.5 to 5%?
Or 7.2.
Right. Oh shit. Not such a good idea after all, right? So and so, you know, everybody wants like the magic pill.
Yeah,
There isn't a magic pill.
there isn't. You got to grind it out.
Yeah.
Listen, it's a pleasure. Thanks so much again.
Always a
Gotta
pleasure
do it
to chat.
again.
Yeah.
Get you back to your skylight.
Yeah.
Thanks again.
Thanks.